The evolution of currency vertical bar tracing the fascinating history of money from barter to cryptocurrency. Money. We have talked a lot about this word. Simply a person cannot overcome a day without thinking or talking about money. But have you ever wondered how money came to be? In today's video we are going to explore the evolution of currency. The history of money is an interesting journey, starting with bartering and moving on with cryptocurrency in the digital age. We have a lot to explore in this topic, so without further delay let's get into the video. Money plays a vital role in the world, serving as a medium of exchange, store of value, and unit of account. It simplifies transactions and makes it possible for users to purchase products and services without directly bartering. It also serves as a store of value, enabling consumers to put money aside for investments or future purchases. It offers a uniform standard for pricing and value across many markets and industries as a unit of account. The influence of money extends beyond individual transactions, affecting entire economies and global financial systems. It is an essential component of contemporary life because of how its value and accessibility can affect social well-being, economic stability, and growth. The history of money began with the bartering system, which was the direct exchange of goods and services. Bartering was an effective system, but it had several drawbacks. The system was inefficient and time-consuming since two parties had to have wants that aligned. As a result, commodity money, which utilized particular items as a means of exchange, was created. It made it possible for people to exchange things without directly haggling for them. Trade between various locations and communities was enabled by this because transactions became more efficient and a standard value for products and services was created. The use of commodity money continued for centuries. Although there are many suggestions among historians and anthropologists, it is unclear where money as a medium of exchange originated. According to one view, the challenges with bartering led to the development of money as a means of payment. Bartering depends on two parties having demands that align. For instance, a farmer looking for a new tool might need to locate a blacksmith who wants their produce. Particularly in vast and complicated cultures, this can be ineffective and time-consuming. By enabling people to buy and sell products and services without having to make a direct exchange, the introduction of a means of exchange, such as money, simplifies the process. Another theory suggests that money evolved as a symbol of authority and prosperity. The best items for use as currency were things like gold, silver, and precious stones since they were uncommon, valuable, and convenient to keep. As early societies advanced, those who had access to these priceless artifacts gained more power and respect, which solidified the value of money in society. Later, gold coins were introduced, and the amount and quality of gold they contained determined their value. Many ancient civilizations, notably Greece and Rome, used gold coins as their primary form of money. Gold also played a crucial role in the development of the modern monetary system. Many nations adopted the gold standard in the 19th century, where the value of their money was closely correlated to a predetermined amount of gold. This aided in promoting global trade and stabilizing currency values. Gold is still a significant asset in the modern global financial system. It serves as an investment safe haven and a buffer against inflation during unstable economic times. Even though gold is no longer the foundation of the financial system, its historical significance in the creation of money cannot be disregarded. The use of metallic money, which predominated for many centuries, was overtaken by the invention of paper money. In order to promote trade and business, paper money was initially used in China during the Tang Dynasty in the 7th century. The notes could always be exchanged for precious metals like silver and gold since they were backed by those commodities. Over time, the usage of paper money extended throughout the rest of the world as many nations created their own paper money systems. In the Western world, Paper currency was introduced in the late 1600s in Europe, with Sweden being the first country to issue paper currency in Europe in 1661. The use of paper money became widespread in the form of banknotes issued by central banks, replacing the use of commodity money and metallic currency. Paper money was easier to carry about than metallic money and allowed for more efficient and practical transactions. Along with digital and electronic payment methods, paper money is still a common type of money in today's world. Fiat money was introduced as a form of currency following the widespread use of paper money. Fiat money is a sort of currency that is supported by the government's legal tender regulations rather than being backed by any tangible assets. In the 20th century, the usage of fiat money expanded dramatically, with the majority of nations making it their primary currency. Fiat money gave governments more power over their monetary policies and a better way to run their economies. However, it also raised issues with inflation and the notion that a currency's worth depends on the strength and legitimacy of the government that issues it. Despite these concerns, fiat money continues to be used as a standard form of currency in most countries around the world. Development of technology has influenced many fields, and money is not an exception in this case. A more recent development in the development of money is the rise of digital currency. Digital currencies, also known as cryptocurrencies, are decentralized forms of currency that use cryptographic techniques to secure and verify transactions and to control the creation of new units. Since the launch of the first digital currency, Bitcoin, in 2009, numerous additional digital currencies have appeared. One of the key benefits of digital money is that it eliminates the need for intermediaries like banks or other financial organizations and enables quick, secure, and inexpensive transactions. Additionally, it enables greater transactional anonymity and privacy. Blockchain technology is used by digital currencies to create a distributed ledger that securely and openly records all transactions. In contrast to traditional forms of currency, the usage of digital currency is still comparatively infrequent, and it confronts difficulties like volatility, regulatory ambiguity, and security issues. Despite these difficulties, the emergence of digital currency has created new chances for financial innovation and has the power to alter how we view and use money going forward. Also, the rise of cryptocurrencies has presented significant challenges to traditional banking systems. Given the potential for cryptocurrencies to promote financial inclusion and access for individuals who are underbanked or unbanked, one of the primary problems is that they are decentralized and do not need intermediaries like banks to facilitate transactions. This may cause havoc with the established financial system and make it more challenging for banks to retain their market leadership. Additionally, because the cryptocurrency industry is largely unregulated, it may be challenging for banks to adhere to all applicable rules and guidelines. This may result in uncertainty and the hazards of working with cryptocurrencies. It may also be technologically difficult for traditional banks to keep up with the rapidly changing Bitcoin world. But after all these evolutions, the impact of currency on global trade cannot be overstated, as it is a critical factor in determining the competitiveness of countries in the global market. The price of imports and exports can change due to currency changes, which can therefore have an effect on trade balances and economic growth. For instance, a stronger currency can increase the cost of exports, while a weaker currency might increase the cost of imports. In terms of capital flows and foreign investment, currency is also important. Investors frequently prefer to invest in nations with stable currencies and low rates of inflation. Additionally, the usage of a dominating currency as a reserve currency, like the US dollar, can have an impact on international trade and financial systems. As a result, nations that keep significant reserves of the reserve currency may benefit because they can borrow money at lower interest rates and experience more financial system stability. I think we have reached the halfway point of the adventure, but there is still more to come. The further development and uptake of digital currencies, such as cryptocurrencies and central bank digital currencies, is expected to influence the future of money. The rise of digital currencies raises questions about security, privacy, and financial stability, while also providing new prospects for financial innovation and inclusivity. To ensure the safe and secure use of digital currencies in the future, as well as consumer and business protection, it will be necessary for there to be strong regulatory frameworks and infrastructure. In conclusion, the development of money is a fascinating story of inventiveness and human ingenuity. From the earliest days of bartering to the emergence of cryptocurrencies, the evolution of money has changed how we trade products and services, invest our money, and engage in international trade. Despite all the challenges, the history of currency has shown that human beings are highly adaptable and resourceful when it comes to creating systems of exchange and value. It will be interesting to observe how the evolution of money takes place, as well as any upcoming advances and developments. I hope this video was entertaining and informative for you. Don't forget to share this fascinating journey with your friends and family. Thank you for watching, and we will meet you back with another video soon. Until then, like, comment, share, subscribe, and stay tuned with our channel.